Okay. Let me use the opportunity to welcome everybody to the webinar, particularly our participants and also our panelists. We have run a short video at the beginning which has introduced all of our panelists. But again, it's only proper that I introduce them more formally. We have Mr. Inola Aboyeji, the co-founder, Flutterwave, and founder, Future Africa Fund. We also have Ms. Odunayo Eweni, co-founder and COO of PiggyVest. Mr. Musa Itokpa Jumo is the Director of Payment System Department, Central Bank of Nigeria. And when we get into this, you realize that he's the one who has to carry all of the problems that are created by all of us in this discussion. Dr. Kabir Katata is the Deputy Director, Head of Policy Unit, Research, Policy and International Relations of NDIC. Branka Rakchajaj is the CEO of 9 PSB. Ireti Samuel Obu is the Managing Director, CEO of Citibank Nigeria. Mr. Usoro Anthony Usoro is the CEO of Yellow Digital Financial Services. Mariam Uwais is the Special Advisor to the President on Social Investments. And last but not least, Joshua Yao, the Managing VP, Africa Payments and Wallet Business. So welcome to our participants. I can see many of you are still joining us. The question is, why fintechs? Fintechs have the potential to create jobs and economic growth. They are also a good way of providing easy, cheap financial services to the unbanked particularly and the underbanked. An estimation is that fintechs provide financial services 70% cheaper than the traditional banking or insurance and other financial services. Africa has also the highest number of mobile transactions. So the number of fintechs in Nigeria has grown considerably since the Central Bank of Nigeria issued the Payment Service Vision in 2007. We've seen the number grow significantly, such that today there are over 200 standalone fintechs in Nigeria. I will use a chart that has been developed by Segun Adeyemi to illustrate the variety of these fintechs. You can see such a large number of them and operating in various fields or various sectors, including mobile money and agency banking, lending, assets management, payments processing, consumer payments and digital wallet, TechFin, remittance and currency exchange, digital banking, digital insurance, personal finance. So clearly there's a large number of players in different fields, and we have got the experts in this panel that will help us digest all of this and hopefully get us to understand the issues much more effectively. Before I hand over to the first panel, we are going to have two panels, again, as we have explained. Let me say that not only is the Nigerian fintech space growing in numbers of companies, but also it's growing in terms of international attention. With the acquisition by one of the giant US payment companies, Stripe, of Paystack, the Nigerian company, recently for over $200 million. It shows you actually the size and the importance of that market. One of our panelists, Inola, has also sold part of his this thing in Flutterwave. I'm not going to say how much he sold it for since he's on the panel. Maybe he will tell us so that the younger people in IT can now see the great potential that this area represents. I think without much ado, let me therefore invite Ireti Samuel Oku to lead the discussion of the first panel, which is dealing with scope of services, key drivers, key success factors, and the challenges. Ireti, over to you.
Thank you, Dr. Usman, and welcome again to the panelists in this session, Inyola, Branka, Joshua, and also Mr. Jimo. So before we get started, I will just kick off with a level set. And it's fair to say that uneven income distributions widens the inequity between the rich and poor, and inclusion reduces that income disparity. And it also enables economic growth, because we know that half of our country, almost half of our country, is living below $2 a day. And it's important to enable inclusion so that loan savings and also stimulation of micro businesses happen. It's important for access to finance as well, which enables increased productivity, greater non-oil exports, and obviously improvement in our exchange rate. And it also provides an access of the informal sector into the formal and the excluded into becoming included, and has a positive impact on the living standards of those who are previously excluded, and enables the growth of savings and enhancement of living standards. So this is an important initiative to focus on financial inclusion. But what are the challenges and how can this be best achieved? And to kick us off, I'm going to be asking Mr. Jimo if he can give us a sense of what he thinks the role of traditional banks are in this endeavor. Mr. Jimo?
Okay, thank you very much. I know we don't have enough time, but I would like to give a very short background, the journey into our financial inclusion strategy. Basically, the National Financial Inclusion Strategy defines the financial inclusion as achieved when adult Nigerians have easy access to a broad range of formal financial services that meet their needs. And this has, actually driven all our initiatives since 2012 when we committed to this declaration. As we speak, and based on the last exercise that was conducted, basically to gauge the level of inclusion, our inclusion level has risen up to about 68%. The initial target was to reduce the exclusion level from 46.3%, as we had it in 2010, to 20% by the year 2020. That's the National Inclusion Strategy. And so there are major actors that will help us drive this. But first, let's even ask ourselves, what are the major issues? What are the major deterrents to financial inclusion? What are those issues that are preventing us from achieving this state of financial inclusion? One, irregular income. Most people don't have regular incomes. And so if they don't have that, there is no need for them to go and save, because they can't even, feed themselves. How much more to go and save? It's one of the major issues that, has created the financial inclusion problem that we have in Nigeria. Long distance to financial access points, proximity to nearness to bank branches, financial touch points were also identified as the major issues delivering our financial inclusion strategy. Why do I say this? You have some locations in the hinterland where you don't have a bank branch or even a financial touch point, not an ATM, not an agent. And so it makes it very difficult for them to access financial services. The other one is the complexity in the opening or the requirement for opening bank accounts. We had a time in this country where if you didn't have a valid driver's license or a valid international passport, you can't open a bank account. You don't have a required document to open a bank account. That also contributed to the challenges of financial inclusion. And then awareness. Awareness was also a major challenge as identified during the survey, because a lot of people are not even aware of some of these financial services and all that. So basically what we have done is to put up strategies together to make sure we drive this down and allow financial inclusion to thrive. Bank has been playing a major role in providing requirements for banking activities, providing transaction channels and acquiring channels, such as deploying agent outlets and all that. We also, the banks are also responsible for providing savings, credits, and other financial services that will basically encourage those in the hinterlands or those that are unbanked to come on board. And I think as we speak down the line, we'll also try to showcase the advantage of having the FinTechs, the new discussions now, which is the FinTech, on board, and the role that they also play in trying to drive financial inclusion. But banks are majorly the major actors that will drive financial inclusion, because they are the ones that will provide account services, they are the ones that will provide transaction services, they are the ones that will provide all the financial touch points where the customers and the service providers can actually engage. This basically summarizes the state of financial inclusion in the country.
Thank you, Mr. Jimoh. Very helpful in helping us understand what banks have done so far. And in fact, some of the limitations that we face in terms of, sounds like literacy, and also even the branch network, and how difficult it's been for them, for the excluded. But I think I want to now turn to what FinTechs can do, and you reference them as well in your statement. And what I'd like to ask now is, what is the role of FinTechs and what are the enablers? And I'll turn that question to Branka first and then Josh. Thank you.
Thank you, Ireti. That's a very good question. And let me start with saying that all those 60 million of Nigerians are unbanked and lack access to digital financial services. Actually, access to mobile devices and the internet is growing. And over 56% of the population, which makes around 112 million Nigerians, reportedly had access to the internet in the previous year. So that brings me to the very first enabler, and that's digital approach or mobile money. So payment-focused solutions have surged over the past 2 years, and spurred in part by the central bank's financial inclusion drive. And Mr. Jimoh already mentioned that there was change in regulatory policies, including revised KYC requirements, especially for lower tier accounts. But also what he mentioned, that banks are to play significant role in this financial inclusion, which brings me to the National Financial Inclusion Strategy established in 2012 by the central bank. And following the objectives of this strategy, actually Central Bank of Nigeria recently approved 3 payment service banks, and 9 PSB being the very first one to commence operation in the Nigerian financial ecosystem. And that means that we are allowed to leverage on mobile and digital channels to enhance financial inclusion through provision of financial services. On the other hand, even though access to internet is growing, infrastructural and geographical coverage limitations over significant part of population, populated territory are still there. And that brings us to the second enabler for Nigerian market, and that's agent banking as important driver of financial inclusion. So the key here is actually synergy between bank, payment service banks, and agent networks. And what that means that part of the strategy and initiative of all the players in this FinTech ecosystem is to distribute a wide agent network that will enable consumers of digital financial services to conclude basic banking services, to start with cash in and cash out transactions. So also on top of that, we should enable merchants to actually make transactions using mobile money. And then also, as I mentioned, even though the access to the internet is growing from year to year, we still have significant population in Nigeria that is using feature phones. But there is also a solution for that, and that's USSD codes that clients can use actually to approach these services. Moving forward, I would say one of the enablers would be also product, lower transactional costs, and superior product mix. What do I want to say by this is that for many people in cash-dominated societies like Nigeria is, the ability to make non-cash payments is not a big enough incentive to change their habits. And also, even when low-income people seek out for formal financial services, they face several barriers to access them. So the enabler for this would be to tailor a superior product mix to offer to this target population, and at the same time to regulate transactional costs for banks that are driving actually financial inclusion in Nigeria. And then we also have, as Mr. Jimoh mentioned, that we are lacking actually financial literacy in Nigeria, and at the same time, enabler is to focus on this. And I understand that there is already a framework created by Central Bank of Nigeria for implementing consumer protections, and starting from schools by including actually financial services into school curricula, and at the same time to increase awareness of financial products, services, and markets among adults. So that would be the second one. When I said that's financial literacy, and then consumer protection is critical for this targeted segment, because we have to ensure transparency when it comes to product pricing, preventing exploitation by service providers, we have to monitor the levels of consumer confidence and to ensure the soundness of the financial sector. So, and the last but not the least enabler in Nigeria, demographics. So Nigeria has actually 50% of 200 million population is less than 25 years old. So what that means in practical terms, that we have technologically savvy population, or children that will grow to be technologically savvy. And they are seeking for compelling products, seamless execution of processes, and excellent customer service. And FinTech players are actually the one to provide this kind of services. So that would be all from my side. Thank you,
No,
Rati.
that's great. And I'll ask Josh to add any other comments on enablers.
No, thank you. No, I think Branka has said it quite well. I think especially the last point, where as a fintech, we at OPay have just observed, right, the market itself, right, the Nigerian market itself, the people are really the biggest enablers, right? I think we have just found it to be a really thriving market. Like we do business and have people all over the world, and the Nigerian market truly have a lot of potential. So I think people are, out there, we as businesses, I think all the panelists here are working day and night to try to figure out how we can, grow the business. And ultimately, I think the enablers really are just people finding solutions to problems. Yeah, so I think that's the market itself. Yeah.
Thanks, Josh. I guess what is at base fundamentally different from what the traditional banks are doing and what the fintechs are doing, or should I say when you're leveraging mobile, is that your starting point with a bank is a bank account, and we find that many are unbanked, but the starting point with mobile money is the cell phone in your hand, which more people have than bank accounts. So I guess that inclusion starts being addressed in a much more definitive way when you're looking at mobile money and a fintech proposition. But let's talk about the scope of services. And while you have the floor, Josh, it'll be good to just understand how you see the evolution of these services that are going to the financially excluded.
Yeah, so I'd love to talk about it from what we see. Here I think of it as two big buckets. I think when we talk about financial inclusion, right, it's always helpful to go one or two levels deeper. I think there are two big buckets: are payments, access to payment services, and then cash and other types of payments, and access to financial services, so loans and savings. What we see so far, I think the first phase in Nigeria, I think the staging and the phasing is very important. If you look at what happens in other countries around the world, like there's always the stages on how the evolution goes. So I think there's a Nigerian way. I think it'll be a little bit different, but a lot of it will be the same. We think the first phase, what we saw is from payments and offline. Right, so basically that's agency banking. So I think agency banking is very hot now. I think we see tremendous growth. We at OPay, we have, I think, 100,000 active agents now, 300,000 registered agents in the country. The payment volume from ourselves growth about 10 times this year. We think the sector growth at about two to three times. The whole sector, the whole industry growth about 2 to 3 times. So you don't find many industries in the world where you grow 2 to 3 times a year. Whereas I think the agency banking now is very, 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 very hot, right? So I think a lot of people are going in, a lot of the panelist companies are coming in, and that's a very good area. But I think that's only the first phase. If you look at it, right, as exciting as this is, because now that's mostly cash in and cash out. So I think that's still digitization step 1.5, right? It's not even step 2 yet, because you're still just having a way to transact cash, right? That solves the problem of banks having to have a lot of capital intensive branches and ATMs, which are expensive to build, but we use people to do it. So that's going to continue to grow for a few years, maybe 2 to 3 years at this fast rate. And then the next stage really, where you want to get away from cash. So then the core activity, right, if you look at what payment is really the use of means of transactions, right, means of payments. So basically people use the cash to buy things at what we call merchants. So the next stage, as Branka has pointed out, I think would be really merchant non-cash acquiring. Right, basically, for example, right, in other parts of the world, there's bank cards, which is going very well, credit cards, which is not yet going well. in Nigeria, and then there's another wallet-based QR code, right? On your cell phone, on your mobile phone, can you pay a merchant to buy a bag of rice, to buy a cup of milk, to buy a beer, right? That's going to be the next stage. I think the drive for truly cashless society. So I think that's offline. Online, I think that there's a whole series of things, right? I think online is going very fast. Where when you go to Jumia, you can buy e-commerce online, you can pay for bills online. But I think that's still very small. So I think that's going to take off, but it takes some time. So if you look at those two payments, right, the true enabler, the holy grail, is really, I think, the wallet on the mobile phone. And the interesting thing is what we find is in Nigeria, and I'd love to take the other panelists' thought on this, right? Nigeria, unlike many sub-Saharan African countries, it's really hard to get the wallet to take off. I think many panelists have tried, the companies and many fintechs have tried, and nobody really as successful as Kenya or Ghana or Ivory Coast yet, for some reason. So that's the true enabler, is the wallet, so that's somebody to kick off. And then I think the next big phase, right, is really getting payments is only part of the issue. Right, when people talk about access to finance, financial inclusion, people a lot of times think about access to loans, really, access to financial services, loans and savings. So those two, and I think the big part here is really, right, the access to loans. I think in Nigeria's case, could come from access to payments. Once you have all this digitalized access to payments point, you have people's data outside the credit system. So payment providers and acquirers can then be in a good position to access people's risk. So in this area, I think Nigeria could actually leapfrog the rest of the world and go directly from, skip kind of maybe a little bit skip the kind of traditional credit bureau system, which is still very nascent in Nigeria, and go directly to scaling access to credits to that way. So which is a very advanced model, right? You see that in Alipay, you see that in Square in the US. So that's a very advanced model. And I think Nigeria could potentially go straight to that. Sorry, it's very long, yeah.
Thanks, Josh. So that's a great evolution that you've painted from just purely cash in, cash out, and then digitizing that flow to an e-commerce flow, albeit offline, and then eventually to being able to access finance. But all of those are not without challenges. So it'd be great to hear from you, Eniola, what you see as the challenges, not only in that evolution, but in general, in terms of accessing finance in this sector.
Absolutely. Thank you very much for having me on the panel. In my general experience, in terms of thinking about what the grand vision is of digital financial services or FinTech to the much broader economy, because sometimes we fail to connect those two, it's usually helpful to understand the framing that a digital economy has to sit around, on top of. And at the heart of that framing is digital infrastructure, access to broadband, access to telecom services, access to information and data, and so on and so forth. And then there is digital platforms. You're talking about things like identity. Mr. Josh just mentioned credit bureaus, whether they're in the form that we have them now or in some adapted form in the future, they would need to exist as a validator of multiple different platforms. And then resting on top of that, you then have digital financial services, which makes it easy for you to leverage and create value on top of the digital infrastructure and digital platforms. And then on top of that, you have your digital skills and your digital entrepreneurship. Digital skills, very self-explanatory, talent that actually helps you grow the digital economy in a very globalized world. And digital entrepreneurship, which is also talent, but more with respect to solving specific problems that people might have. So when you have this framing, then you can identify the areas where we seem strong and the areas where we seem fairly weak. And I would want to pick on two issues that I think are particularly, would I say, under-invested when it comes to how we're building our digital financial services as it will support the broader national objectives of building a developed country that's strong and powerful in the world. And those two issues are digital platforms and digital skills. Digital platforms in particular, without a clear identity framework for the country, and this is a very topical issue given some of the challenges and opportunities that have popped up with the latest proclamation of the Ministry of Digital Economy on NIN numbers and SIM. Without a harmonized identity system, we cannot scale the digital economy. We cannot scale financial inclusion. We cannot scale any of these other issues. This is the biggest roadblock to Nigeria truly achieving the potential that it has when it comes to FinTech. It has to harmonize digital identity in a way that makes sense and in a way that makes it easy for new people to come in. Some of the challenges that we have in that space include, we have we've decided to go the route of going with biometrics. And the challenge with biometrics is beyond the fact that our farmers' hands are calloused. We also have a dynamic where those technologies don't belong to us, and so they're not easy to replicate. They're very expensive to replicate, and they cost us billions and billions of naira. By shifting our attention to more adaptable systems like facial recognition, which is very, very developed, right? Not only do we avoid some of the challenges and identity issues, we also have an opportunity to build IP that's local to us and that can be leveraged globally. So these are some of the strategy shifts that need to be there. This on the digital platform side. And then obviously harmonization of all data around people and allowing them to have a role in releasing that data to people is extremely important. But it's important that we can give them control of their data so they can release it to platforms, other platforms that are giving them value for their data. And then secondarily, there needs to be a big shift in terms of how we think about digital skills. And I hate to be the one saying this, given my track record with Andela, but we gotta start looking outside of just developers. There's so many things that we can do outside of just developers. Even just as simple as helping small businesses to get online is something that digital skills need to be built around. A lot of small businesses have a desire to get online, particularly after coronavirus, but they don't have a sense of who can help me with the tools, who can have a 30-minute conversation with me about simple tools I can deploy in my business today to make it more efficient. And these are the things that would enable our digital economy and financial inclusion to actually be deepened. So the big challenges, in my opinion, how do we harmonize, come to an understanding about digital platforms? How do we encourage more people to get into digital skills? These are extremely important.
Great, thanks, Inyola. And there are other challenges to think about, actually, and those are great ones, and both in the private sector space and also government. And it'd be great to hear your views, Josh, in terms of what else do you see as the challenges in addition to the digital platform, digital ID challenges that Inya has just taken us through?
Yeah, that's great. I think lots of challenges. I think everybody can talk about them. I see in terms of practical day-to-day, when the businesses like us or institutions, like banks, scale, I think there are a few key things we have to solve. One is, I think, if the evolution that I talked about earlier, right? I think to get to the next stage of cashless society, we have to somehow to get micro merchants to accept digital payments. Micro merchants, and they're the key in Nigeria, right? 400,000 of them, with more than 1 million turnover a month in Nigeria, and they're also just like they're the key in everywhere. Actually, in China, in the US, same thing. You have to really solve the micro merchant key. And then looking into them is very hard, right? They take cash today because their transaction is very small. So you have to find a hardware solution that's not too expensive for them, right? The traditional POS, if you give to them, it doesn't justify, it doesn't break even. So somehow we have to find a solution to the hardware. Deployment, getting to the micro merchant one by one is also too expensive. Right, so how do we, like what Ms. Iowa said earlier, right? Like how do we get to these small businesses? So I think this is his term and my term by the same people, right? What I call micro merchants. How do you get to them? Getting them one by one is too expensive. Here, I think, right, I think talk about challenges is more useful to talk about potential solutions. I think here is actually a great opportunity for some private-public partnership, especially a cross-sectoral partnership. there is already very strong network of government networks into micro merchants and to the poor people. For example, agricultural cooperatives. For example, cooperatives in all sectors, including the big markets, right? I think that in the Ministry of Agriculture, Ministry of Payment, Ministry of Transportation, that they have toll gates over the country, right? Can they partner with fintechs? Because they have people that needs to take payments and can reach to the micro merchants. They have the network, and then the fintech have the tools and the technologies. Can we partner together, not just in the financial sector, but outside the financial sector, to really reach the poorest of the poor and unbanked? I think that's a very big area for big challenge and a big area for breakthrough. In terms of online wallets, right? If you talk about, I think what we talk about the merchant that's still offline acquiring, offline payments. Truly, for online wallets, to get the wallets to people to use the wallet on the phone, what we have seen as a key challenge in Nigeria is the lack of use cases. Where we have a wallet, we have an OPay wallet, and people install them, but people find out there's not much they could do with it. They could top up the airtime. Pretty much that's it, right? They still cannot use the pay merchants yet. There's not a lot of online. They still cannot buy most of the things online. They cannot order delivery takeouts, right? They still can only pay some of their taxes online. So that's the use cases I think we have to solve together with everybody. And I think lastly, right, the most important part, I think the most interesting part for Nigeria really is, again, the transition from payments to financial products. So I think here, where, as I said, Nigeria has an opportunity to leapfrog, many countries in the world, just like it had an opportunity to leapfrog many countries in telecom, right? Jump directly to 3G and 4G. I think the same thing here. There's a lot of opportunity, and then here I think the regulations would play a key role. Right? I think in the future, very soon, maybe in the future, even now, right? A lot of fintechs, even a lot of banks, would have a lot of customers' data on payments, right? We know where we serve 7 to 8 million customers every month now, who take their bank cards and swipe on the POS machines. So we have data about them. Very soon, we should be able to offer them loans, where we know how much they use and how much they pay. So for us, they have very good credit risk. So we can provide the data to offer them loans. But of course, right, those are two different sectors of the payment ecosystem. How do we enable them to truly work together? I think that's a key problem to solve for the regulators. And I think Mr. Jumo and others are thinking about this actively. International experience, for example, such as Square in the US, Alipay in China, etc., are taking this. When they started from payments, and very soon they are a substantial lender, or they partner with institutions to become substantial lenders to allow access to credit to these micro merchants and to the end customers. Because you have the payment data, right? Because right now the reason that people are not lending in Nigeria is they don't have credit data, right? I don't know what credit history people have, so I can lend to them, right? And that's a very hard problem to solve. So I think potentially in Nigeria we could skip that step and leverage their payment data, because we're digitizing payment relatively quickly in Nigeria, and then we can allow them access to credit based on payments, because we see that cash flow. So I think that is a big problem and a big challenge, and I think a big area, a big opportunity. And I think it'd be really great for the governments and private sector and banks to kind of work on these problems together, and break this area.
Thank you. I want to just take two themes that you've mentioned and ask a couple of questions of Branka and Mr. Jimo. One of them is the role of partnerships, which you alluded to in terms of increasing acceptance and making sure that more micro merchants are able to accept these transactions. And then the role of public-private partnerships was one that you mentioned. So I'd like to ask Branka if there's any other partnerships she'd like to call out, number one. And then second, I'd like to ask Mr. Jimo about regulation. You referenced how data regulation would be an enabler. And I'd just like to ask Mr. Jimo if there is any thoughts he has about regulation in that regard, or just in general as an enabler. But let's start off with Branka first in terms of partnerships.
Oh, thank you, Irati. I think that Mr. Joshua covered everything. So I will just sum it up. The key synergy and partnership is with agent banking. Then the second one with merchants. And I would say that when it comes to FinTech and mobile money, there is also space for partnership between traditional banks and FinTech. As I said, this is a big market and there is a place for everyone. And we have a big task in front of us to drive this financial inclusion. And by, merging these partnerships and using the knowledge and know-how, international experience, I think that this can lead to successful financial inclusion. I also wanted to point out that we look back on international market and we see many successful examples, especially in Africa. But it's very important to keep in mind, as Mr. Joshua said, that every country has its specifics. So one size doesn't fit all. We have to tailor and customize the services that we are offering in Nigerian market, having in mind country specifics and the situation. So thank you.
Thank you. And Mr. Jimo, in terms of the role of regulation and in all of this?
Thank you. And I'm glad that, above all these discussions, we're able to recognize the fact that the regulator is very key, because basically the regulator creates an environment that enables all the participants, to thrive and conduct their business more responsibly. Now in CBN, what we are doing basically is to lay out guidelines and framework that will drive innovation, that will create an environment for even investors to come and invest in Nigeria. And so for a couple of months, we actually been pursuing some innovative regulation that will drive fintechs, that will make innovators to come on board. One of which is the regulatory sandbox, basically to provide an environment where fintechs, small companies, including the incumbents, can actually come to test their ideas at no cost, to them. Unlike the regulations that we have now, where for you to be able to offer any payment service, you need to come and take a license, and the financial requirement for that is very good. For the regulatory sandbox, will provide you an environment to come and test your idea, and when it matures and you think it's good enough for the market, you can then come and take the license. The other one is to also open the terrain and bring in fintech and give them more responsibility within the ecosystem. And so we are promoting the open banking, open API, where they can also leverage on the existing data that the banks already have on their customers to provide financial services. In a few weeks to come, we are also going to launch the QR code. QR code basically drives the contactless, payment kind of method, near field communication kind of payment channels. And so those are some of the initiatives, that we bring out as regulators. So regulators sitting in the middle will basically connect all the participants, all the major, service providers, including the banks, to provide services that will drive, our economic stability.
Thank you, Mr. Jimo. And it's very exciting what you have said, and this is the topic for another webinar in terms of how regulators have inspired and promoted innovation. And Branka said at the beginning that, the birth of the mobile services banks was really the genesis of that is regulation. And it's fantastic to hear how the regulators through sandboxes and open banking. And I think that should help the point that Joshua made about data portability. With open banking, it means that you have access to data and has been permissioned by the individual for that data to be used in multiple access points. So I think it's fantastic to hear how regulators are partnering with the industry and enabling innovation. I want to just move to what I think is our last question, given the time, to Inyola, to just ask about the impact of COVID. I've heard it said that in 3 months, the pandemic accelerated digitization 3 years. So what's your view in terms of how the pandemic has accelerated the inclusion cause?
Yeah, thank you very much. I'll say, the pandemic kind of centered digital financial services and the need for digital financial services, because many people believed for a very long time that, you know, the only way to do this thing was physical, and that there was no need for us to build any kind of alternate, more scalable approach. Even with all the leadership from the regulator, from the government, many people just never believed it. And we'll talk a little bit more about during the next panel, about some of the impacts. But I think what COVID helped us do was just bring it to the fore. These are our gaps when it comes to digital. What happens if something like COVID happens again? How are we going to have a more resilient society that can bounce back from that without a focus on digital? I think that has now introduced that into the lexicon. And my hope is that even when the vaccine comes, rather than just go back to the world as it was, we actually take time to build out this resilient paths, so that if something like COVID happens again, we're not as shaken as we were earlier this year.
Thanks, Iginola. And I think, if there's anything good that has come out of COVID and the pandemic, is the fact that the cause of digitization has been accelerated. But I'd like to say thank you to all our panelists. I think, the different flavors that they bring underscores the fact that it does take a village, and it's all about the ecosystem. It includes the regulator as well, includes the banks, includes the fintechs, includes all of us in trying to make sure that we improve financial inclusion in Nigeria. Thank you very much, everyone. With that, I'll hand back to Dr. Isman.
Thank you, Ireti, and the panelists for this excellent discussion. For the participants, we're going to have a 2-minute intercession where we will conduct a poll. There will be 10 questions that will be displayed on the screen. We need very quick answers from you, yes or no. And before the end, we'll show you the result of the poll. Secretariat, please start the polling. Okay, thank you very much. The Secretariat will coordinate and show us the results of the panels, of the polling. Okay, the results are there already. While this is on the screen, let's go into the second panel. And I would like to invite Ian, who is going to be the moderator for the second panel. Ian, over to you.
Thank you very much, sir, for the honor. And thank you so much for our panelists for joining us on this second panel. And thank you to those who moderated and spoke on the first panel, which was fun. In this panel, we're going to be discussing accessibility, security, and regulation. And those might seem like oddly arranged words, but the big idea here is, there is, a level of understanding that for financial inclusion to be achieved, even with FinTech, there has to be greater accessibility to more people. However, with greater accessibility comes invariable challenges around security, which means, again, that the regulator has a role in ensuring that Nigerians are safe, even as all these things happen. And that Nigerians' hard-earned money and savings remain safe. And to discuss this with us here today, we have Mr. Kabir S. Katata from the Nigerian Deposit Insurance Corporation, where we have Mrs. Miriam Uwais, who is the Special Advisor on National Social Investment Programs. We have Mr. Anthony Usora, Anthony Usora from MTN. And then finally, we have Mrs. Oduayo Eweni from Piggy Bank, who's a FinTech. Rather than go into lengthy, introductions of them, I would actually rather that they told us a little about themselves and a little about the work that they do, kind of as a first introduction. And so I think we will start with Dr. Kabir Katata. Tell us, you can introduce yourself, tell us about the NDIC's mandate, what is changing about it with respect to FinTech. Dr. Kabir?
Thank you very much. Good morning, everyone. It's 3 minutes to 12, so I'm still in morning mode. The NDIC has 4 mandates. First and foremost, the NDIC works very closely with the Central Bank of Nigeria, as all deposit insurance do. The 4 mandates are deposit guarantee, which is to make sure that your funds in the banks are safe. And presently, based on the 500,000 we have as coverage limit for commercial banks and primary mortgage banks, we have covered about 97% of total number of depositors. It's only 3% that have over 500,000 in the bank. Second, we work with the central bank to ensure that banks are run in a safe and sound manner. And we do that through bank supervision. We call that on-site, where you go to the banks to examine the books to make sure that they run the banks according to all applicable laws of the federal government, as well as all the guidelines established by the central bank. We also partake in failure resolution. When a bank is experiencing problem, we try to resolve it, again, together with the central bank, without making sure that it doesn't fail. But if it must fail, then it should be done without seriously affecting the payment system. As you are all aware, banks are the most critical aspect or components of the payment system. And based on what happened in 2007, you can see that the failure of one bank, Lehman Brothers, caused a worldwide global issue. And finally, our mandate is bank liquidation. When a bank fails, we liquidate it. We make sure that all the uninsured depositors get any money they have above 500,000. Then the creditors, they have their claims also, as we recover the assets from the banks. And finally, if there is any residual claim, the shareholders of the banks also get their own portion of the assets.
Fantastic. Thank you very much, Mr. Kabir. I'm going to move on to Mrs. Weiss. Again, would love you to introduce yourself. Tell us about what the Office of the National Social Investment Program does and its touch point with financial inclusion. Thank you.
Thank you, Ian, and grateful for the opportunity to engage with such a large audience. I'm grateful to Susman. My office ran 4 programs: the school program, also government empowerment, and enterprise program. Essentially, working with those who are very vulnerable, who have never opened bank accounts. So we have quite a bit of experience or knowledge of what happens in the sector of the financially excluded. The programs are now being run by the Humanitarian Ministry, but we're about to start a new program on children out of school or children at risk. And we're also facing similar challenges. So this is a very interesting and opportune webinar for me, because I need to understand a lot of the issues what the brains behind financial inclusion, the way they're thinking, so that we can engage and ensure that all the various strands of payments actually get to the intended beneficiaries, people that can't read or write, people that have never been engaged with banking. And coming from our experience, I feel this is a very timely webinar for us. Thank you.
Fantastic. Thank you so much, Mrs. Uwais. I'm going to go over to Odunayo Eweni from Piggy Bank. Introduce herself, tell us a little about what her company does. Thank you.
Okay. Hi, everyone. My name is Odunayo Eweni, and I'm the co-founder and COO of PiggyVest. We used to be called Piggy Bank. We are a 5-year-old fintech company that's essentially in the business of micro investment. So the idea was to allow young Nigerians to get access to investment opportunities that they would otherwise not have access to by lowering the barrier to entry, the financial barrier to entry. So in 2016, when we started, the idea was to allow people access opportunities for as low as 100 Naira a day, 1,000 Naira a week, or 5,000 Naira a month. And that's what we've been doing for the past 5 years. And now we're looking at applying the same strategy of breaking down into micro pieces to other aspects of financial services, like regulation has now come to support micro insurance, micro pensions. And so those are like aspects of financial services that we're looking to incorporate into the platform.
Fantastic, thank you very much. And then, finally, Mr. Osoro, would love to hear from you about MTN's efforts at financial services and inclusion as Nigeria's, one of Nigeria's largest telecoms companies. Thank you very much, sir.
Thank you, Ian, and thank you, Dr. Usman, for what is a very well-run session so far. So MTN today plays in FinTech through Yellow Digital Financial Services. YDFS is a FinTech subsidiary of MTN that has been licensed by the CBN to offer super agent services. Today we have just about 90,000 agents that are actively involved in distributing financial services. We have almost in excess of 300,000 agents that are registered on the platform, with about 90,000 of them that are transacting actively. As super agents, we distribute FinTech services for licensed financial institutions, whereas MTN were also interested in doing a whole lot more. But firstly, the issue of addressing distribution at the last mile and ensuring that last mile users of financial services are well served is what we're focused on right now. So that's what we do. Thank you.
Thank you very much. So I'm going to ask a bunch of questions for the next couple minutes. And they'll be specifically targeted at individuals on the panel and really kind of focused on your mandate and how it, it helps with improving accessibility, security, regulation, especially as it pertains to fintechs and their impact on financial inclusion. I think I'll begin with you, Dr. Katata. The mandate of the NDIC is to ensure that the deposits of hardworking Nigerians are protected, right? And that there is, you can make sure that your funds will be there, especially guaranteed. Now, as more of these deposits move online because of fintech, I know that a big threat to the mandate has been cybercrime. What kind of action is NDIC looking to take, both from a regulatory perspective and an ecosystem perspective, to secure the deposits of hardworking Nigerians against threats like cyber attacks? And how do you think it might be able to influence the industry to take cybersecurity more seriously?
Thank you very much. The session is really going well, and it's quite informative what we are getting from all the cybercrime. As we know, we're talking about crime committed using the computer. So we are trying to have access to information without authorization, really. I mean, for anyone that is a participant, either a regulator or a supervisor in the banking system, there is a global body under Bank for International Settlement, and they set the rules and guidelines that we work with. There has been a document released in 2018, December to be precise, and it's on cyber resilience, and they looked at range of practices globally. And what they are saying, in short, is most supervisors, bank supervisors, leverage previously developed national or international standards in terms of cyber resilience for financial market infrastructure. And what are the strategies used by the bank regulators like CBN or supervisors like NDIC? Well, most regulators and supervisors generally do not require a specific cyber strategy, but they all expect institutions to maintain adequate capability in this area as part of their global strategies. And that they expect that the institutions, which is the banks, will minimize their exposure to cyber threats through ensuring that systems are secure by design, and that emphasis is placed on resilience in light of current threats rather than compliance to a standard. So having said that, what are the sort of standards or laws in this area? Well, first and foremost, we tend to forget it, but the Constitution, especially Section 37 of the Nigeria's 99 Constitution, is laid the foundation for data privacy and rights in Nigeria. It guarantees that your right and information should only be available as mandated by law. Also, where there is a Cybercrime 2015 Act, which sort of criminalizes data privacy breaches, that is cybercrime. You also have the NITDA 2019 regulation, which is addressing data privacy and protection in Nigeria. This is general for all firms and all people, including the banks. Specifically to the banking sector, a guideline was released by the Central Bank of Nigeria, the risk-based cybersecurity framework for deposit money banks. It became effective 1st January 2019. It designates, this guideline designates financial services as a national critical information infrastructure. So the whole idea is to regulate the sector by introducing minimum cybersecurity requirements. And the board of directors are tasked, they have the mandate in promoting and overseeing the bank's internal security strategy, while the senior management, the MD and the executive directors will be responsible to make sure that it is implemented. And each bank is supposed to have a chief information security to make sure that there is a smooth day-to-day implementation of all these policies, and that all the banks have to integrate cyber risk management within their broader risk management policies. This includes identifying all external threats such as hackers, as well as internal risks like careless or compromised users to optimize data security across the bank. So how do we, what are these rules or regulations relevant? Well, through the on-site supervision of the banks, we make sure that the banks inculcate and enforce these laws and guidelines. All the laws that are established, like the Constitution, like the guidelines on data privacy from NITDA, and then the guideline by the CBN, we need to make, we work to make sure that it is imposed by the banks. The banks do that. We also carry out off-site surveillance, and if there is a need, we sort of call the banks for special examination. What are the other things we look at? Well, the NDIC also, apart from this risk-based supervision, we regularly review how much we cover the hardworking, the deposit of the hardworking Nigerians you mentioned. How much is it that we cover that will continue to have confidence in the system? And if you recalled earlier on, I told you that we cover up to 500,000. As I'm talking to you now, due to impact of COVID-19 and others, as well as part of our operations, according to our guideline, the global best practices, we are reviewing, studying and reviewing the coverage level. Is 500,000 adequate? What do we see happening in a year or two? Carrying out stress tests, and this coverage, it considers the impact of FinTech related issues and other things that may come on board. Also, we try to understand what are the limits of coverage. What do we consider as insurable coverage? Because FinTech is bringing a lot of blurry things into the line. There are a lot of things to consider. Again, the NDIC alone on its own, and in partnership with the CBN and FSRCC, which is a committee of all the financial system regulators, which is sort of sanctioned by law, we carry out public awareness campaigns on FinTech, and cybersecurity. We target financial correspondents. It's a yearly event called FICAN. We call all the financial correspondents in Nigeria, both that are using the traditional media as well as online virtual. We tell them the current happenings in the global financial scene as well as the local, so that they can understand what is going on. We go to universities. The NDIC partners with universities. Also, the CBN was in the lead when we sat down to change the curriculum of all universities, of all secondary schools, to make sure that FinTech and other things are incorporated. We go to general all the depositors through trade fairs, radio jingles, trying to inform them what you should do, what you should do, what you shouldn't do. We have a help desk dedicated 24-hour line when you have an issue, and it's toll free. You can call for inquiries. The website is there. So we keep on doing that. Also, we host seminars and conferences to learn from experts. We invite the banks, we invite IT consultants, IT firms to know what is going on. We are also partnering with the judiciary, because they are the final board stop. If there is an issue, we all go there. We try to educate them. As I'm talking to you, we are having an event, a yearly event, which starts tomorrow. And I will be there. We'll talk to the judiciary. And incidentally, the first paper is on evolving role of cybersecurity in the banking sector. And we called an expert to come and talk to the judiciary about that. They need to understand what is going on, so that it's not only when a case comes, then they may give a judgment which will compound and set the whole thing on the wrong direction. Finally, we monitor and investigate fraud in the banking system, including FinTech related. Each bank submits fraud, causes of fraud, attempted, how much is lost, who initiated it, through which channel. And that is done also including through FinTech channels. Thank you very much.
Thank you very, very much, Dr. Katata. That's a very comprehensive answer, and it's great and warming to hear that so much effort is being made to protect the deposits of Nigerians. I'm going to move on to Mrs. Uwais to ask a question about financial inclusion and economic inclusion. It's a question that comes up a lot, and especially given your vantage point in being that nexus between economic inclusion and financial inclusion. A lot of people tend to say that financial inclusion cannot work because our people are simply too poor. They don't have any money in those bank accounts that we want to open for them. So what's the point? And the first thing the government has to do, like the Indian government has done and many other governments has done, is encourage economic inclusion. People have to be given micro pensions. People have to be given subventions. People have to be given, healthcare or school subventions, etc. And your office has been kind of the vantage points for government's efforts in investing in its people and pushing forward that mandate. But I want to ask, how has the NSIP's program, which is very focused on this economic inclusion mandate, how has it translated to more financial inclusion? And if it has not, what are the challenges?
Thank you so much, E. It's actually a truism that financial exclusion is highest where poverty is highest, basically because there is a dearth of infrastructure in many of those places, and banks simply don't go where they won't make business. It's about profit. So it's important that fintechs begin to engage with that. But what we did in the 4 programs, that we saw a huge ramp up in financial inclusion, even for the Empower, which category of beneficiaries were mainly graduates, at least 500,000 of them. We engaged NIBS, and NIBS, you had to have a BVN to be verified before we could begin payments. So coming from NIBS, we saw that there was a huge ramp up even for the youth, because if your BVN did not match your name, you wouldn't get paid. And this is what we did with the cooks too. And the cash transfer, unfortunately, in many of the rural communities where we developed a social register of the poor and the vulnerable, there was no banking infrastructure, and agents too were not as many as we would have liked. And there's the need, if we do have agents to make payments, they need to be there all the time so that when people, trust the system, they understand that they can get value from saving their money or investing their money or leaving their money with a third party, that's a bank that they don't know anything about. At least they know that if they take 200 today, tomorrow they go to the same place, they can get 300 naira out. If that agent is not there, then you lose that customer. So we had those challenges and the unique identity, and there were other things, like the regulation. We saw that with the cash, with the school feeding program. CBN, unfortunately, insists that you have to have a bank account, a phone number as identity for the bank account, even for the virtual account. And many places we found there was no power. So even if people had phones, they couldn't charge. We found places where there was no network. We were actually collating the data in the rural areas, and we shared it with, for instance, IHS, so that they would ensure that they put up the masts in those areas. We tried to engage the Rural Electrification Agency, REA, to see whether we could test having solar energy, solar charge points for these women where there were networks, but there was no energy. But the reality is, even if there's no value coming through the phones where the FinTechs come to, the women just won't keep those phones and use them. They will sell the phones. We saw that in Jeep. A lot of the women sold the phones because they were given phones to get immediate returns, because there's so many contending demands on that item, on the income you get. So they'd rather just see the money come in immediately to address their various challenges. And they use the numbers of their children or their husbands or the counselor, and there's always a cost to that. They don't see the alerts. Now, I don't have, it's very interesting for me that you mentioned the facial recognition, because if it's faster, then for the poor, really, it will encourage them. And then if we can continue to pay through the phones, and the FinTechs are able to support this, then clearly we will be able to get these women to appreciate. And then we have to talk about what happens on their own side. Do they understand that they can get value consistently? Do they understand the benefits of having a phone and using that phone? Financial literacy is critical, because otherwise they're going to lose, they're not going to use the phone, because you need to keep topping up for you to retain the number anyway. And when all your income, the entire month is maybe 50 naira or 100 naira, you're certainly not going to prioritize keeping that phone. And these are the people. And I find that there's a lot of, maybe because we're too comfortable where we are, where we sit, people presume that once we start sending money through the phones, people will catch on. There has to be a concerted effort to make them understand on the other side how they can get credit. We try to do that with the G program. So we send you 10,000 naira if you have a phone. You don't even need to have a BBN. You don't even need to have a BBN at that point, because we're using BBN because BBN now you can generate new numbers with that. But if you pay back within 6 months, you get 15,000 naira. And if you pay back within 6 months, you get 30,000 naira, trying to build your credit history so that by the time you get to 100,000, you can walk into a bank and ask for payments. Now, this is what the idea was under Jeep. But of course, there are a lot of things that happen in the field, in the rural communities that we really need to nip in the bud. I worry about regulation. you know, even for the agents, because sometimes there's extortion that happens or excessive fees, and these people, they keep 10,000 naira under their mattress. They know that 10,000 naira is there, unless, of course, somebody knows it's there and goes to steal it. But if you put 10,000 naira, what we've seen, the trends all over the world is when you start this financial inclusion effort, you have to be ready that these people will withdraw the entire amount when the payment is made. Otherwise, you know, they won't allow you to keep 1,000 naira. They're going to feel they're being cheated. You know, and we started a pilot under the cash transfer program where the banks, where the payment service providers that we were able to procure in an open system were encouraged to open accounts for the people in the field so that we could start making payments. And, you know, some of the agents or some of the banks do not allow for people to withdraw the entire money. They say, you have to keep the accounts open. You have to leave an amount. So this happens over a period of time until confidence is built. And then they realize that this happens. But there's a lot of impatience, you know, and we need to hold the hands of our people. And we find that the Northeast and the Northwest, they have the highest rates where poverty is highest, as I said. So,
yeah.
want to.
Yeah, thank you so much, Ma. That was very, that's very educational for us. I just want to make sure all our panelists get an opportunity to talk, but that's amazing context for many of the challenges that many people don't even get to see when we talk about accessibility, security, and regulation. I'm going to move on to Mr. Osoro, and I want to pick up on something you said, which was, you had mentioned earlier that you're currently an super agent network, and you're looking for more opportunities, you see more opportunities in the financial services space. And, you know, and my question is basically, you know, you're juggernaut in the telecom space. A lot of people worry that if you get into the financial services space, they have a lot to worry about, right? What opportunities are you seeing in the financial services space that you cannot pursue, perhaps with a bit of partnership, given your current status as a telecoms player? And do you really think these fears of dominance are valid? Are they valid? Are they unfounded? And if they are, like, what are you doing to address them?
Thank you, Ian. Very nice question. The reality is, the way MTN plays in this space, we do not see ourselves, and neither have we ever been disruptors of any space. We usually go into different sectors to work with different partners to transform that space. And there's a difference between disruption and transformation. In transformation, we see ourselves as growing the pie. And with the larger pie, working with collaborators, everyone gets a larger piece. It was Joshua, I think, that mentioned earlier that one of the biggest problems we have in the country is growing wallets at scale and building the relevant use cases to ensure that you can get traction and get transactions in there. All of that requires various members of the ecosystem playing various roles. Probably in our local market here, we would need a number of players working towards addressing inclusion, creating wallets for customers. But the issue of creating use cases is not one that you can do alone. Neither MTN or lots of players that offer wallets would be able to offer all those services. You probably would rely on a piggyvest to offer high yield savings into those wallets. You probably would rely on lenders, maybe like the carbons or even the banks, to provide loans to those wallet providers. You would rely on remittance partners to open up remittance corridors, whether it's regionally or internationally. So ultimately, it's about increasing the value pool, not just for the customer, who ultimately is who we should be concerned about here, but also for all members of the ecosystem. Imagine a world where we were all worried about a power problem in Nigeria. We're all worried about who should be providing power, more importantly than who we should serve. There are tens of millions of customers today that are financially excluded. That should be the ultimate goal of bringing them in. And the bigger question is, it is not the next bank down the road or the next fintech that is competition. The biggest competition is cash. Over 90% of our transactions are still cash-based. It wouldn't take a single player, it wouldn't take 5 players for us to digitize cash. It takes efforts of all players for us to be able to do that. And so the competition in any context is not the next fintech player down the road. Big competition is cash. And there's a huge work that needs to be done, concerted effort amongst all players for us to be able to grow inclusion, number one, for us to be able to create education. And Mrs. Wise mentioned that there is no silver bullet in all of this. You would not expect that by crediting funds into people's account, that's all it would take for us to drive inclusion. We still need customer education. And customer education would not just happen with above-the-line campaigns. Ultimately, the best form of customer education is engaging customers, possibly through agents, showing them how to use their wallet, educating them step by step on how to use it. So it's not it's not a single bullet to fix this problem. 2, it is not one that one player can do alone. We need collaboration. And that's how MTN intends to work in the space, collaborating with all players within the ecosystem, expanding the pie, expanding the value pool, so that ultimately we deliver better value, not just for customers, but for all members of the ecosystem.
Thank you so much, Mr. Osoro, and we're grateful for MTN's participation in the ecosystem. I'm going to move on to Otun, and this might be our final question because I know we're a little bit over time. And you know, you've had an amazing run as a savings platform. Nigerians are typically characterized as not having a good savings culture, but you've broken that myth. And you know, in a recent survey, you know, as many, I think you're like the number 2 or number 1, sorry, digital banking or savings platform that people are using. What features in your platform do you think are driving this growth with Nigerians? Why are Nigerians who are typically characterized as not being willing to save, more willing to save on your platform than they are on other platforms? And what's your biggest barrier to scaling that?
Well, I think that in 2016, it was true that Nigerians had like poor savings habits, but I think that a lot of that was due to the kind of infrastructure that existed for the market that we're currently serving, and I'll explain. In 2016, every time you try to invest in treasury bills, for instance, and you approached a traditional asset management, the cheapest and most affordable one would give you the lowest interest tier for 100,000 naira. Like that was your buying amount, right? And what that meant in a like where the youth population is super large and a lot of us like earn anywhere from 70 to 100K every month, is telling people that you're not allowed to invest. We don't want you to invest unless you can do it with your entire month's salary, right? So that's the gap that we saw. What then happened was that young Nigerians who mostly have 2-3 bank accounts were now saving into actual wooden boxes in tiny bits. So there was a gap there for people who could not afford to drop 100,000 naira like at once, but yet wanted to be part of the financial services ecosystem that were not being attended to at the time. So we created the platform that would allow them put in 100 naira a day, 1,000 naira a week, 5,000 a month. And all of a sudden, the problem shifted from like the willingness or lack thereof to save and more to how much do you want to put aside, because this structure is now finally here. And we couldn't have done it, of course, without the infrastructure enabled by Paystack and Flutterwave. And that's one of the very key things I think we need to speak about when it comes to financial inclusion. A lot of it boils down to people who want to build, having to also build their own infrastructure. So people save on PiggyVest because access, and then it's affordable. and it's easy and it's transparent. It takes 3 minutes to set up. You can upload everything that we require, like to do your tier 1 KYC, and you're well on your way. And a lot of it is done from your mobile phone. So that means that you don't have to take the trip to an actual building. So that convenience is something that characterizes like the millennial generation and generations that come after them. And that's something that has to also reflect in the financial services that we're presenting to them, right? What can they afford, right? They cannot afford those giant amounts. So you bring it down to them. How do they want to interact with their finances? You bring that to them as well. And then you begin to layer on all of those things, right? And I'll say that the biggest barrier to scaling, I think, would be number one, funding, and number two, like engagement with the regulators, right? We work with the SEC, we work with asset management, and honestly, it was a journey to that point. And I think that we were particularly lucky. We're now 5 years in this space, and we've learned a lot. But I think that there's something to be said for the steps to regulation being clearer and more detailed and friendlier to startups that want to venture into the fintech space. There's so much to do around financial inclusion, agency banking, just like even micro savings and micro investment. And now we have cryptocurrency. People ideally want to solve these problems, and they want to solve it smartly, and they want to solve it legally, right? They just need to know where to go. Right? From our journey, 2016, 2017, 2018, those were the issues that plagued us. And I think those are the issues that still plague the ecosystem. The second thing would be funding, right? A lot of Nigerian startups, fintech startups specifically, have to look to the West for funding because the startup asset class is still not something that Nigerian investors and high net worth individuals understand. So we want to scale, like we want to serve millions, hundreds of millions of Nigerians, but we need the resources and we need the people who are regulating us to be able to sit with us. Like there is no company, like I think in Nigeria, especially ones that are tech enabled, that want to break the law. We really would like to be able to sit down and have conversations around this is what you should do, this is where you should go, this is the department that regulates you in a way that's clear for both parties and that's like mutually beneficial.
Thank you so much. And we had more questions, but we've run out of time. I want to thank all our panelists for their thoughtful responses and for giving us a lot of insight. And I hope that we've all learned something from this session. So without further ado, I'm going to Dr. Usman for the panel. Thank you very much.
Thank you very much, Ian, and all the members of that panel for this excellent discussion. For all our participants and the panelists, we are now composed into one panel to do Q&A. And we've got a tremendous set of questions, both during registration and now as the webinar was going on. The only assurance I can give to our participants is that if we don't get to answer your question now, we have agreed with the panelists that we'll direct it to them. They will answer, we'll go to your emails. Once we get the answers from them, we'll email the answers to you, along with the recording of the program. So let me start by asking this question that came in from Lawal Kankia Ibrahim, and also Jamiu Ganiu. It's a similar question, so I've rolled them into one. And the question is, could fintechs be a serious threat to traditional banks? And how can the banks collaborate with fintechs for synergy rather than trying to compete with them, and vice versa? I think I would like Ireti to take a bite at this from the bank side, and Musa Jumo from the regulator side to say, what are you doing, in fact, to encourage a cooperative environment rather than a competitive one? So starting with Ireti.
Thank you, sir. I think I concluded my remarks without even knowing that this question was coming. I concluded the first panel by talking about an ecosystem and about it being, there being space for everyone. And I genuinely believe that it's a collaboration and a partnership. First of all, fintechs need bank accounts, so they are natural clients of banks, if I can say that, first of all. But secondly, I think it's a perfect storm between fintechs and banks, because banks have the long track record, they have the balance sheet, and they have the customer relationships. And fintechs are nimble and able to create solutions with time to market a lot shorter than banks. So I actually see that there is synergy between the two. The fintechs can hopefully partner with banks to get some scale and to get access to clients, while we as the banks can then partner with fintechs to really improve our technology and our time to market. So I get asked this question a lot. And, I was on a Eurofinance panel in Europe last year. And, this question has come up like almost every single year I sit on panels. But I think the short answer is that there are many opportunities for collaboration. And I think with that mindset, it means that we can jointly tackle the problem at hand, which is financial inclusion as well.
Thank you, Ireti. Musa, Jim, or do you want to have a bite at the question?
Yes. I think Ireti basically touched on what I actually wanted to say. That, what we see from the regulatory perspective, collaboration between the fintech and the banks. For us, there is no threat. They are basically going to work symbiotically to produce excellent financial services. Banks should focus on their core and let the innovators develop products that the banks can also leverage on to push their financial services to the consumers. And to give more impetus to that, that's why we bring out regulations like open banking that guarantees the fintechs to connect to banks and leverage on the account information that they already hold and provide financial services on top of that. So for me, I'm not sure any banker would feel threatened. Rather, there is that partnership and collaboration to extend financial services to the nooks and crannies of this country.
Thank you very much, Musa. Dr. Ayodeji Koka asked this question. Given the experience of Nigeria with e-wallet during the applied to the agri sector during the President Jonathan administration, and then with the experience of the N-Power, the cash transfer that Mariam has very elaborately and ably explained. The question is asking is that what key lessons have we learned, particularly in light of implementing social investment projects of the government? And I think the best person to answer this obviously is Mariam.
I didn't quite get what it is that he wants to understand.
He's asking what are the key lessons learned from the implementation, the use of this fintech and other, particularly in implementing the social investment programs?
Well, they were very useful in urban and semi-urban areas where we had the infrastructure and we had people who had a knowledge of transactions, of banking transactions, the value of it. But where we don't have that, and the places that have been excluded traditionally remain excluded because of the disparities have continued to grow, because we talk only about how well we've done in areas where there are already the services and the foundation for supporting the fintechs. We really need to crack those areas where we don't have infrastructure, and we can't wait until the infrastructure is there. We just need to use, brains like E, they need to crack how to get to those areas. Working with the agents who have phones, how do we get money to these people? So we recorded high success rates in areas where fintechs were appropriately supported by the environment, the infrastructure that was required. But the places that were excluded remained excluded. And this is the larger areas.
I think this is a very important point, which I think all of us here have one of the takeaways. How do we then address this problem from the regulatory side, from the operators, particularly the operators? How can you tweak your provision of services in order to be able to achieve, to reach out to the unserviced areas, unbanked and unserviced areas? I'm sure this is something that will be of great interest to everybody here. Grema Abubakar Jugudum says that 80% of youths are jobless. I'm saying he says because I'm not sure of the statistic. I'm quoting him. What specific ways can fintechs using the CBN's financial inclusion do to help them to start small businesses? And I think, let me pass this to Odunayo to answer this.
Well, I mean, I think that essentially the solution would still be to bring all participants to the table, if I'm getting the question correctly. Can you help me repeat the question so I can properly answer? I think
He's saying that 80% of youth are jobless. Therefore, in what specific ways can fintechs assist them in helping to start small businesses?
Well, I exactly what I was saying is about like fintech being allowed to operate in like regulated spaces. That's the first thing. And the second thing I think would be to recognize the fact that fintech companies have the ability to create and actually empower people to create jobs, right? There's fintech. Paystack employs upwards of 200 people. Photowave employs upwards of that number as well. 2-year-old companies are employing upwards of 50 people, right? So there's job creation as an element there. The second thing I think is that innately, fintech companies allow young people to put aside very little amounts of money that they can then use to start businesses. For instance, on PiggyVest, a lot of the testimonials that we get from young people are, I've been able to put X amount of money aside to start a barber shop. I've been able to put X amount of money aside to start a consulting firm. I've been able to put money aside to buy my car. We're essentially providing upward mobility, which essentially is also helping young people like figure out direction, have enough funds to chase a particular entrepreneurial dream, and many things like that. So obviously, I think that parties need to come to the table because largely employment creation is it's a social enterprise that cannot be undertaken by the private sector alone. But as it's going, financial technology companies are providing jobs, and we think that allowed to scale, allowed to operate properly, and regulated properly, they can create even more jobs and also indirectly empower other young people.
Thank you. Abiodun Salami says that I'm already well serviced by the traditional banks. Why do I need to use the fintechs going forward? I think this will be a good question for our two people who have already set up new banks, payment service banks, and are waiting for the final gun to be the go from the central bank to go. I will ask Branca to have a go at this, and then Usoro as well. So why he's saying my needs are well serviced. Why do I have to use your services?
Thank you. That's actually a really good question. Let me start with reminding everyone what is the goal of financial inclusion is to provide financial services to those who are financially excluded. Even if the person in question that asked this question is well served by banks, the question is if that person has a family or, mom, dad, or any relatives in rural areas that don't have access to money at this point. Let's tackle again the question of COVID and like the situation that we all faced in 2020. So the point is that FinTech and payment service bank are offering the possibility for transactions between banked people and unbanked people. So if you want to send money to friends or family in rural area that don't have access to branches, how this person that is well served by bank will do that? So that's the first answer. So that's the aim of FinTech and aim of payment service banks. So the second thing is that, as I mentioned, the COVID situation. So many banks operate with less capacity. People are working from home. So maybe the time to money is slower now, and FinTech organizations aim to deliver this faster, to deliver these services in more secure and more safe way. So this is just like to start with. There are many other benefits that FinTech and payment service banks are bringing to the table, but let's tackle just these two for now. Thank you.
Okay. Usoro?
So we see the market three broad segments. People like the questionnaire who have access to bank services and are happy. I mean, by all means, keep enjoying the services of your bank. But the other two segments, one is people we consider underserved. They do have access to financial services, but there may be one or two or three other services that they do not currently enjoy from their bank partners. It could be microloans, it could be microinsurance, it could be access to payment services. And for those category of customers, you also have an opportunity for fintechs to be able to serve you. And there's a third category that are completely excluded, financially excluded today. And that's another category that fintech players need to bring on board so that they can also go through the journey of not just enjoying financial services, but ultimately also upsell them to the banks for more complex financial services. Most fintechs may not be in the business of offering mortgage, may not be in the business of offering vehicle asset finance and other complex financial services. By bringing them into the financial service industry, system, we're able to upsell them even to banks to offer more complex financial services. So that's the way we see our role.
Okay, I was giving the two newly established banks an opportunity to do some marketing of their services, but I will assist you, I think, in answering this question to the gentleman, which is something that the two of you have not even spoken about. Two things. One is the issue of the cost of the service. You remember in my opening remarks, I said that it's been proven that fintechs can provide those services at an average of about 70% reduction in the cost of provision of that service. So that's one cost advantage that you have over the traditional banks. The other, I think, is bringing you those services wherever you are in Nigeria or in the globe. Anywhere in your bedroom, if you like, if you want to be in your farm, anywhere that you are, the service will be brought to you. Plus, they will also not ask for a piece of your grandmother's hair before they give you the service, which many of the traditional banks will do. And they will not require you also to come to any branch to see anybody. They will deal with you from wherever you are, and you get the service much more cheaply. So Branca and Usoro, you can see I'm doing some marketing for you.
Thank you.
Very much so, thank you.
The next question is from somebody whose name is not very clear, but he says, what are the key learning points for Nigeria from the experience of the other countries, especially China, given the recent experience of Alibaba? I think the best person to answer this obviously is Joshua Yao. What can we learn from other countries? What are the key learning points, particularly from China as well, where this business has grown tremendously?
Yeah, thank you. So I think a lot of the people know a lot of the learning point. I can I can talk. I think that there's something that are a little bit deeper, right? First of all, one is obviously, like technology sometimes seems like a sophisticated thing and a difficult thing, but actually it's supposed to be easier, right? Having access to mobile phone, like you said, is easier than going to the branch or going, especially for the people who are far away. Right? So that helps financial inclusion and customer access a lot. But I think even in the experience of China, right, I think this is going to happen in Nigeria too. Just like what Ms. Miriam has said, still, right, the really excluded people would get included faster, but they would, in the initial phase, right, it's still harder to get to them. Right? If they don't have a cell phone, if they don't have power, if they're really, really far away from everything else, it's still hard. So I think that's a legitimate challenge, and it's a difficult challenge. So I think financial inclusion, even in China, right, if you look at in China, which is very much a developing country, the farmers who are really far away, right, was still the later part of the adopter in financial inclusion. So I think in China, what happened, what was going well was the companies, right, like active, vibrant companies, like everybody on this panel, try very hard thinking of innovative solutions and figure out what are practical solutions to solving this problem. So like the people like Alibaba, like they would hire people to go to the farms to teach the farmers or sell financial inclusion and products to the farmers. And step by step, they're all very complicated models, that operating models that let them get to that. So eventually they will get there. And I think one interesting lesson for me is Alibaba. Right? You look at, for example, the recent almost IPO story of Ant Financial, which is under Alibaba, under Alipay. Right? When they have the initial financials, the reports. When you look at it, it's very interesting. Right? Alibaba started as a payment company, just like what I said. Right? Started as an online payment company. You buy something online on Alibaba, then you pay with Alipay. And then it got bigger and bigger. Then you can pay bills. They could do B2B transfer, becomes a wallet, but like what MTN has done very well in other countries. And then if you look at now, when they're going to IPO, actually more than half of the profits comes from loans, comes from credit products. Right, so this is the same experience in many financial payment companies. Same thing with WeChat Pay, with WePay, and then companies in the US, in Southeast Asia, exactly the same thing. So this is what I was talking about. I think the big lessons to be learned from China was there's a big opportunity here when we talk about financial inclusion to marry and think about the staging between payments and loans, payments and loans and savings. Right, I think that's the true beauty of it. And you can, once you have payments, you have data. With the data, you can give people access and distribution to loans. I think that's, I think everybody here are thinking about it. I think, I'm sure Branka and other people are thinking about that. So I think that's another lesson that could be learned. Yeah.
Okay, thank you very much. I think this one, Dr. Katata, you may want to have a go at this. Usman Salisu says, is there any legal framework that protects micro merchants and shared agents for using QR code to accept payments? Obviously, since you are covering in terms of insurance, this is something that should also be of concern and of interest to you. Well, the legal framework that governs some of these transactions.
I mean, to be quite honest, thank you very much for giving me the opportunity to talk. The direct payment system might have been the best placed. We are talking about payment, but they are guaranteed or they are covered based on all the several guidelines that are issued by the CBN. Now, in terms of their deposits or other sort of arrangement in the banks, they are also protected through the various circulars guidelines that we release. We specifically, the NDIC, we cover the depositors explicitly, and We also cover all other claimants or participants in the payment system through the supervision we carry out, and we make sure that if there is any issue that comes up, if you have any complaint, you can write us or CBN to make sure that such an agreement or operating license is covered or obeyed by the banks and all other claimants in the system. And principally, that is what I think the CBN oversees.
Musa Jimo, do you want to have a shot at this as well?
Yes, sir. Please, can you help me repeat the questions? Sorry.
Well, it's asking for whether there's an appropriate legal framework to protect users of these services broadly. And maybe I can add a second question from Samir Diko, which says, what sort of companies use the regulatory sandbox framework? Are there success stories to be told here? So do you want to take the two?
Yes. To the first question, every user of financial service or banking service is actually protected. We have a whole department set up in charge of consumer protection based on the regulations that have been set and national statutes. So there are regulations and there are conditions of services, and they are covered. To the extent that we have informed the public that when you consume any of the financial service or payment service, and there are issues, if you cannot resolve it with the principal agent, the bank, the mobile money operator, or the payment service provider, then escalate it to the central bank through the consumer protection department. So we have regulation around how consumers of financial and payment services are protected. On the regulatory sandbox, yes, it's free. It's going to be free when we open the cohorts. We're going to have a window when we open it, and ask individuals and companies to apply and share with us the kind of products they want to come and, test within the sandbox. So it's going to be open. We haven't done it. We just have the regulation. We have not really, opened any cohort to experiment new idea and innovative ideas. But it's something that we look forward to, opening up by next year. But the regulation is what we're trying to bring out now to basically create that awareness and the fact that CBN is open, to a lot of innovative ideas. There are many success stories in Asia. You have in Singapore, you have in UK. UK is actually a major development partner with us in this regulatory sandbox. The Financial Conduct Authority is actually working with us in ensuring that we also implement a very successful regulatory sandbox. And those environments have actually implemented successful ones. So there are success stories.
Okay, we are running out of time. I think I'll just throw two questions at EE. Participants, as we said, we cannot answer all questions during this session, but we promise you to address all your questions. There are two questions. The first one says, what processes have by Ibe Nwandu? What processes have been put in place for failed transactions, especially for the low-income people who don't have the resources to do any follow-up or make additional phone calls or complaints and so on. Even this customer complaints department of the central bank that Musa is talking about, very few people know how to access that directly. So what processes, and particularly given our, unfortunately, the issue of cybercrime, and unfortunately what is associated with Nigeria, the 419ers. What kind of processes have the FinTechs put in place to assure people, particularly low-income people, that their transactions are secure?
Thank you very much for that question. I can't speak for all the FinTechs, but I know that quite a number of us have been thinking about this challenge, and I can speak with respect to Flutterwave, where I was a shareholder and one of the co-founders. What we try to do is, we have some basic operational guidelines. So for example, We try to monitor all the transactions to ensure that things are not getting hung. And if things are getting hung, we just reverse the transaction without even asking any questions. So if the transaction is within our control and it seems like the transaction has not gone through, we either manually process those transactions or we reverse them automatically so that the person gets the money back. But we try and resolve these issues within 24 hours. And particularly with respect to protecting payers, we recently launched something called the Flutterwave Payment Protection Program, which essentially means that we provide a guarantee that every time you spend with Flutterwave, if the item you paid for didn't arrive, or you don't like it, or it's damaged, or it's faulty, or were you scammed, right? Essentially, we pay you back, no questions asked. So we'll provide you back your money. Those come out of insurance. So that really helps. And then finally, we have a platform, an online platform, which people can access with just, it's free to access. It's data free to access, called dispute.flutterwave.com. So if you see a charge on your account, you can actually go on that website, enter in the details of the transaction that you saw on your account, and we will tell you who charged you, as well as give you an opportunity on the spot to dispute that transaction. So these are different innovations that we've come up with in order to protect people and make it easier for people to be able to seek redress whatever their challenges with their transactions. I'm sure that we're on the market for more, particularly for people at the bottom of the pyramid. We're building out call centers where we want to be able to answer them in their local languages. We want to be able to work very closely with agents to be able to register any complaints and redress them. Those are things that are going to come with more scale. But today, those three programs that we have, our immediate reversal of any transactions, our payment protection guarantee, and our disputes platform, which allows users to be able to log any disputes of challenges of purchases if they don't know who charged them and why.
Finally, I think just one question, because the person has been insisting that we ask this question, understandably, because he works for Shelter Africa, and he's concerned, and that's Dr. Mohamed Gambo, he's asking about mortgage finance. How can the fintechs assist here, given the importance of housing, particularly affordable housing, and how it can create jobs across the country, and particularly in helping government to meet the challenge of affordable housing? Because he's saying not much progress is being made, particularly by the traditional banking system.
Yeah. Should I answer that question, sir?
Yes, please.
Okay. We're starting to get into the mortgage space. I mean, my day job is I'm an investor in technology companies, and we actually recently invested in a company that had the pleasure of working with the Nigerian Mortgage Refinance Corporation around land titles by using blockchain. So it basically helps you register land titles, because a land is the first step to basically rebuilding the mortgage industry. People are not able to buy land easily. If those transactions take too long, it's very hard to transfer titles, and people can't really build their homes. So what they do is, I think the company is called Land Block. They basically do like a mapping, a GIS mapping of a land area, and then they allow buyers to work with more banks, mortgage providers, and all sorts in order to be able to ascertain that the land is valid, and then be able to push credit on the basis of that land. Because typically the way a typical mortgage transaction would work is that it's generally secured by the land. If you don't pay back, the bank has the right to foreclose your house and obtain the land. So this is the first step. And I believe that on that, thanks to the Nigerian Mortgage Refinance Corporation, they've been able to get a lot of state governments to be able to provide a platform on which people can basically click and buy land. but then, and then on the back of that security of the land, they can then seek loans that would help them to build on the land. So I think that innovations like that are the kind of innovations that would lead us. Some of what Odunayo is doing as well in terms of PiggyVest, lands are good places to invest. I think at some point they used to have some land transactions, maybe she can clarify on the platform, that you could invest in, as well as, and I think that over time they would have real estate providers who would also provide attractive real estate investment opportunities. I think if we start to build from the ground up, ensuring people have proper title on their land and it's valid, then being able to secure debt against that land, and then up and up and up. Eventually, the sector will be transformed. But you know, we're looking for partners. You know, if you can reach out to me, we're looking for people who understand the mortgage and the housing value chain, and we can work with them on technology solutions that can ensure that this is mainstream, because housing is definitely one of the key needs of Nigerians, and young Nigerians in particular want more housing. They feel like housing is out of their reach. So there's desire to do this, provided the proper safeguards are in place. Thank you, sir.
Thank you very much. We are already 6 minutes above our advertised time. I'm sure we can go on and on and on, but we have to stop at this point. First of all, to appreciate all our participants. Without you, the webinar would not have been interesting with us up to the end. And this has been brewing for quite some time. But I would like to say that we greatly appreciate all of you. And we hope that all of us will have Merry holidays and a Happy New Year. Thank you very much.